Hi, friends, and welcome to the Breakfast Club. It's bright and early, 7 o'clock in the morning. Ding dong, let's get at it. Let's get at it. Let me just get rid of my engine there. Good morning, good morning, good morning. I got a nice little run up in silver last night. That put us into the helped me recoup that little loss I took yesterday. And I think we're up to 370 or something like that. Yeah, 12 grand last night, and now we're at 370. So it's looking good. Looking good, getting on our way. We're going to try and get the $1 million hit today or this year. Let's look at the NASDAQ and see where we're at this morning. And those of you who are just tuning in that are new to our show, I know I got a message from a fella last night from 2 years ago. So it's good to have him. So Herbert, if you're around, welcome to the show. By all means, join in on the dialogue on the side there, if you choose. I know this is going to be new for some people. I know for you, Herbert, this is a whole new challenge. You're starting off from scratch. So you're going to see some stuff that's going to make you want to go, this is crazy. But it's going to take some studying. You really have to dedicate your time to studying it. This is not a part-time job. This is not well, you can do it while you're working. I did while working a full-time job as a paramedic too. So it can be done. You got to spend hours and hours and hours, countless hours in the charts, studying price action. And you too will, when you see it, you can't unsee it, man. Once you see it, the lights go on. Your life is illuminated forever. Forever. So anyway, let's get started. I've got 28 minutes to get through all these charts. So where are we at right now with NASDAQ? We're up in a premium portion of a 4-hour range. We're right up in the premium, back into the premium of the daily range. Let's have a peek at our basic analysis from start to finish. Let's go back to the weekly chart here. Let's have a little looky-loo. So on the weeklies, we're right inside this big weekly box. You see this? We've now run through it again. We ran through it last week. We're running through it again this week. The question is, are we going to take out last week's high? Take our wick, break it into quarters. We just hit 50% of that. We were around 50% last week. Oh, no, that was last week's range. So that's the highest wick we've got in the last couple of months, since November anyway. And we're sitting around that 50% mark. So the question is, do we drive higher and get through this? There's an imbalance right there. But as you know, about all imbalances, we have to include all of this. And you see how this now becomes, this whole candle here becomes a suspension block. That's where Michael gets the term, a suspension block. So that's a weekly suspension block. Look how large that is. That's from 25.2 to 25.9. That's 700 handles just in that section alone. And look where we're banging around in. We're sitting in that whole suspension block on the weekly. So you can see why Michael is saying it's so volatile. You're right up and down. We've got small little imbalances in here. And yes, we cut through candles, Herbert. That makes it even more of a challenge, right? Retail just likes to read it one candle at a time. We like to cut back through the candles, and you'll see some crazy accuracy doing that. But just follow along with us. You'll eventually, it'll just seem like noise, 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 and then all of a sudden you'll pick up a note or a tune, and you go, oh, I've heard that tune before. I've heard that note before. And then before you know it, you'll get the whole song. Then it's picking up the instrument and playing it. That's the hard part. Sorry. Anyway, that's the weekly suspension block we're sitting in right now. Now, if I add this to here, it's just going to make a huge mess on my my chart as it is right now. Anyway, that's where we're at there. I'm not going to put that on the chart. You guys get an idea of where that's at. Let's look at the daily. Now look very closely at the daily. And here's where Michael was saying you're going to get chopped up. It's a switching back and forth kind of environment, and it's gapping. Look at the gap we had here. There's a small gap here, gap, gap, all these gaps, right? And you see how we find sensitivity on those on the daily. Then we react off of them back to order blocks, running higher, using these to leverage to push higher positions, and then turn around and just slam back on you. It does not even continue to run up into these, you know, finish off the rest of that weekly imbalance we were looking for until Wednesday of last week. We finally ran up, patched that one in, but we still haven't finished this little fella right up here. So if that weekly imbalance that we'd outlined initially, look at this one way up here at 26,435. It's 26. Remember the other one was 25.9? This is 26.4. That's another 500 handles more of imbalance above us. So we still haven't peaked out at this little piece up here. So that one I will kind of note as an upside objective yet to hit. Because don't forget, we still have that one. We have the mean threshold of this candle, and we also have the rejection block, which is where these 2 days hit perfectly off of it and then just left. And all those people wanted to see that go higher. Literally created this swing. This candle said, I'm going to come into the rejection block, reject off of that, go lower. And that's where they stayed until the new year, below that whole rejection block. So we still have this imbalance down here, which is what I'm looking at on the daily. And you see how we're constantly making these strives for new highs, right? See how we've made that little run up there? Then we had that trend line phantom we were talking about before, saying we'd like to see it get back to that midpoint. And you saw me put the consequent encroachment on here, or the mean threshold of this candle. You take the mean threshold there, and I'll just draw that right out. And I put that line across there. You have to go back to the charts. You'll see that was a downside objective I didn't want to see broken. If it was, then I'd be targeting this down here. And it didn't get broken. You see that? We just got a couple of little wicks through it. And then we started running back higher again. Then it was like, if we get back above this imbalance that we've created here, then we're going to use that to go lower. Well, look at this. We ran above it that day. Then we ran back into it, wicked again. The ugliness of this is it's not a precision thing with wicks right now. They're just running it out, right? So we ran out the precision point here. Didn't even come back into the mean threshold of this. Just started going straight higher, targeting this little box right here. And look at the precision on that one, though. See that right there? It tags it perfectly. That's the imbalance. Then the question is, do we retrace back and make this a smaller compression range and just getting tighter and tighter, or do we pop through that and start using that as leverage to go higher? So we're looking for on the 1 minute chart, when we talk about this on a 1 minute chart, we're looking for this very thing where we see the high get broken, the high get broken with a body, and then we want to see it come back, retest this candle all the way back into that imbalance, right? So there's the break above. That's what we talk about on a 1 minute chart. Everything is reproducible on all charts, all asset classes. You don't have to learn a new thing for a new chart. They have their own kind of pulse, as it were, but it's the same setups, same exact price action. It's an algorithm running it. So if you can't get past the algorithm side of things and you think it's all buying and selling pressure and boardroom meetings and all that other shit, then you're not going to do well here. You're going to be frustrated. You're going to say, we don't know what we're talking about. You're going to be projecting your own frustration. So save yourself the aggro and find someone who trades exactly as you prefer, because I only want you to succeed. I don't want to create more anxiety for you. Anyway, here's so we run above that. So we get the body above that high, then we gap up and then run through the gap right back to our level that we're looking for, this little candle right here. We come back to that wick. Again, we just wick through it a little bit. We have that half the wick, we have the whole body, and that just that half that body, which would be the ultimate downside of objective. We wouldn't want to see broken to the downside. So Kim comes back, tags that, and then makes the new high. Runs back up into our little premium up here, and quickly rejects off of that. So now what we're looking for is a new premium array. So this new premium array forms, and we start to run back down. We break it on the downside. You go, great. Now, do we come back and tag it to go lower? Or do we create another candle that runs through this one? It does. It runs all the way back down into a discount portion of this huge range here. If you pull your fib tool on that whole range, you'll see you're well past the 50% portion. Then we gap down again and started running for, I don't want to see the mean threshold get broken. It gaps or literally swings through it, making a sloppy move. We switch through this one and we do not close below the mean threshold, come all the way back up again. And now the question is, we've ran all the way into the discount. So if we were here and that wick came back up in there, we'd be targeting this area here, right? It already ran through that. It literally gapped down and ran right through it. So you go, okay, that's my next target. I want to see a reversal there. It kept going. You go, oh, I'm going to wait until I see a decent reversal in lower time frames to catch this run up from yesterday. And you'll see it around 9:30 or so. And then we're coming back into this premium again. See how we just wicked through it? Now the question is, now what we start doing is we're hunting here and here, because this is like half of a suspension block here, right? We don't have another little gap. Oh, yeah, we do. There's a gap right there, this little watch me gap. Let me get that guy out of there. See him right there? That's a suspension block right there, that whole thing. So we're inside the suspension block. So what we want to see now is any chance for a reversal. So we make it back up into this imbalanced portion here today, and then I see a reversal. That's where I'm hunting for. Now you're coming back into this candle, and I'm looking for half that. This little imbalance here, I'm looking for a retest of that. Or are we going to start running back lower and finally break this one even deeper into this volume imbalance below us? Because we keep busting up. We're making these strides to go higher. We have one quick little trend line break and then right back into running higher again. So I have this one and that one above me here and here that I still have targets for. I don't have this as a target yet. There's too much more to go through before it to reach for that, because there's so many times people have been calling for new highs when it was doing this and got rejected. So be very nimble with your assessments, you guys. So on a 4-hour chart, here's the range we're in. We're definitely up in the premium portion of that. So I'm targeting here for a 4-hour. that'll bring us right back up into that little section we're looking for right there. And right there. Those are the two upside sections, and I got to make sure they're 4 different colors, otherwise that'll throw me off. You got to make sure you have your charts set up in a way that you understand the colors when you start coming into them. If you understand that that's my 4-hour color, and that's my 4-hour color, and the blue is my daily, the gray is my weekly, red is monthly. 4-hour, and then you get back into hour stuff, just slight different changes in colors, but usually I mark it with that yellow type color. But that's the range I'm working in here now. So now we're above the bull trap. See that? Now what I want to see is this bull trap. So now you go down to the lower time frames, and we're hunting for a long here, knowing that the line in the sand for us is going to be, or for me, it doesn't have to be for you, it's going to be right here. That's literally right there on top of that box. That's going to be my line in the sand. And your stop loss would go down here. So it's going to be quite a long stop loss. And if you see that starting to rip through here again, you only want to see it, if it's really strong, you want to see it tag here and start leaving right now. So the next 15 minutes, I want to see this start to really get some legs here and start running up for the 26-100s section. Because if we don't break this next bull trap, which we've got like an overlap of this one and this one, if we don't get that as support, this is support, and then bust through here, then if we start to run through this mean threshold here, look for us to retarget this down here, this whole section right here. Okay, so that'll be the discount box that we're looking for. That's the 4-hour discount, premium and discount inside there. That's where we are at for February right now. Okay. So if that makes sense. If you go from the 3 a.m. candle, if you're going from Mark 3 and he's going short here, it traded up, it's traded below there on the 15-minute chart, and now he's going short. We'll check with him this morning and see if he's going short on that. Let me just make sure I'm live here, because I'd hate to be chatting away and then not be live with you guys. Yeah, we're live. Morning, Hadi. Good morning. Good morning. I'm doing very well. I was up late last night again. I didn't get to bed till 2 o'clock. Just anxiety, and my toes burn 24/7. So sometimes when I go to bed, that just the sheet sitting on my toes, just it burns like crazy. So I've got to get up and pace around and try and stretch it out. And not that that makes a big difference when it's a nerve stuff, but take some meds, calm it down a bit, and away we go. Anyway, that's why I'm a little late getting to this morning. So I apologize for that. Hans, good morning. Powell, good morning. Russell, good morning. Abs, my friend, how are you doing? Hope you're doing well. So if Mark's in here, look for a Mark 3 from here to this Mark 3 back here. So that happens to line up perfectly with the top of our go no go zone, right? So if you're trading a Mark 3, that's a Mark 3 we're in right now. So look for a potential retest of this down here. That's where Mark would be looking. Good morning, Lucas. How you doing, buddy? How's Vancouver? That's really nice. Hey, look at that 3 and 3 overlap. Then we drop down below it, come back up, retest the consequent encroachment. Now he's going short right there. And I bet he's aiming for right here at 790. So on the higher time frame, we are expecting that bull trap, that bigger one over there, to hold, and then this little guy here to start getting squeezed now. So if you want to catch it, this little run here, back to here, you want to see that run back up into that low and catch that for a short. So watch that level right there, that right here. Keep your eyeballsy on that, and then we'll see if we can make it down into here. So Herbert, are you in here? If you're in here, just type in the chat section on the side there. Just say hello. Everybody's introduced themselves to Herbert, or Herbert, introduce yourself to everybody. He was my technician for the internet a couple of years ago. We got chatting. So it'd be good to see you back. Back to rainy season, but always good vibes over here. It's good to hear, buddy. That's what I like to hear. Herbert, there he is. Good morning. Good morning. Welcome to the show. Okay, so that was the hourly. 15-minute. Remember Mark's rule for the Mark III is anything staying below 50% of the consequent encroachment, especially if you run down below it, come back into it, and we're coming back into our level. So you overlap what Mark looks for his Mark III, and what we look for, you can dovetail yours with Mark's and still catch his 3 a.m. run. Because right now, that's our premium box. We've traded into it once, so you'd have to wait for it to close below the Mark III, come back and retest. Well, you can allow for a retest back to the consequent encroachment, which is also our box, which is the premium. Here's the close above, retest, run back into the premium. Now you want to see that hold. So for us, it would be a box-to-box trade. You got your box-to-box trade, then you enter in onto Mark III. You say, I want to see it close, stay closed below here. So if we close below that level right there again and retest it, I'm going to go short, and I'm going to jump into Mark III. So there's the close below that level right there. There's the retest, and that's the short. So in the last 30 minutes, that's the retest for Mark III. And now as soon as it breaks this rejection block, well, it's already hit the rejection block, so you can pay yourself there. Or if it takes out that low, pay yourself, move to break even. You're in a stress-free trade and wait for it to get to Mark's 25.7. So that's 200 handles. If it trades back through that level, you're out of the trade. You've already made money on the way down. You've made money on the reverse, all the way back up, and you're making money on Mark III. So you got a trade down, a trade up, a trade down, and you're risk-free. Does that make sense? Anyway, those of you who understand, have been with me for the last few years, have seen this is the same stuff over and over, and repetition is the mother of skill. Just remember that. Repetition is the mother of skill. So I got 6 minutes and I'm going to blast through some of these other ones now. Anyway, so let's kind of go through some other asset classes just so you can see that this stuff works with everything. So reversal, we have a price imbalance right here. There's a price imbalance. We trade through it, trade back inside it. There's another little tiny suspension in here, maybe. Nope. Trade back into it multiple times. We do not break a body above it. And then we trade back into this range. That's a 5 minute. So I'm picking a different time frame. Those are all daily, hourly, 4 hour. This is a 5 minute range. So we're down into the discount. So we've gone from box to box trade. Done. That's a 7.2 to a 7.9. That's a perfect box to box trade right there. Where are we looking for this to go? We got to break it to a bull trap and the SIBI to the upside if you still want to see that go higher. So watch this pressure. We get pressure on this and it closes below that. Look for this to become the go no go zone for a continuation of the downside. And this is all stuff you'll pick up in time. You got to be hitting it every day, Herbert. You can't do this as a, I'm just going to do it once a week from scratch, because you'll constantly go, I have no idea what those guys are talking about. You got to study the core material. As much as Michael may go on his little rants and drive you nuts, you got to study his core material. I was thinking about putting together my own course. I know it sounds terrible, but I'm just sticking with what I go over every day. You guys have to let me know what you think of that. But I'm going to teach all the rules that I have, the fail-safe, everything, start to finish. So I was thinking about that. You guys have to let me know what you think. But it's really going to give you a nuts and bolts type of ICT stuff, all the way to just running my 4 trading models and the setups and all the rules that go with it. And then I'll build a check sheet so you can make sure that you stay on the rules. So if you like that idea, just give me a thumbs up there. Let me know if you guys agree. Anyway, let's go over to oil. So oil gives us a nice, this is what we were talking about earlier on the daily chart, right? Or that 4-hour chart, where we're at right now. See how you run back above that bull trap? We use the bull trap to run higher, targeting the next premium level. And as soon as we take out that premium level, we'll look for a retest of this. So now we're looking for a range extension. If you get range extension, then we're looking for a continuation model. So here's your retest for a continuation. So you have all the models there. You have, no, you don't have the reversal. You don't have the internal range liquidity hunt. It just runs straight up. Through that, you go, okay, I'll catch the extension model and then the continuation model to the next extension model, continuation model. So you got model 3 and 4 here twice. And you would have called oil, that's on a 15-minute chart, and oil. Change in direction. We have a structure shift in little piggies here. We're running back into this imbalance. I want to see piggies roll over now and start targeting deeper into this range. Pull your fib tool from low to high and you'll start to see, pay yourself at 50%. 62%, internal range liquidity, take profit model 1, great way to save your money when you're just starting out, you're fresh, you're new. Herbert, learn the take profit model 1. It's in my videos. So yeah, so here's our soybeans. See how we had this as our target zone last time. We wanted to make sure that it got stayed above it. It didn't. It went below, then ran back above, looking for this to get targeted and roll over. It didn't. It ran through right into premium, then extended the range. So we had an extension right there. So it created this new long range, came back, tagged this, sent it higher, extended the range. You better have paid yourself there because you got quickly snapped back against you. If you got greedy and wanted to hold everything in there, you left your stop loss down here, it came back, took you out, and you lost all that. So you're going to be watching these pretty regularly. Trades through the bottom half, trades back into it, and keeps going lower. Got 1 more minute to go. Takes out the discount box right here on a close, come back and just clipped it right there for a short. That's the range extension. You extend the range. Now we look for a reversal. There's the reversal. Trades above it, comes back to it. Model 1. Internal range liquidity hunt, model 2. Wait, as soon as it breaks that high, we're looking for model 3 and 4 to extend up into here. Got to break that high though. If it comes back right now and This is not really active for me, so I'd have to wait for a body to get above that. So right now, soybeans is on that direction. Coffee plummeting. We looked for coffee to make a run higher yesterday, and it didn't. It went lower. Then we looked for a retest of the go no go zone. And look at that, right into the no go zone. You got a bit of a wick into that. Your stop loss would have been tight squeeze. Then all of a sudden it finally rolled over and went lower. So this morning, the last 2 hours took you into Glory Town. Let's go over in gold, see what gold's like. I've got my little bot, my little engine here. It's ticking along nicely. Gold really choppy right now, but again, look for the pattern, look for the setup. So we have reversal, body trades through it. What did I tell you about one candle that trades all the way through 1 and 2? You use the last one. It did not trade through this candle here, so you don't use that box yet. You use the one that it trades through. That's the one it trades through. You get short right there, and you're targeting the mean threshold of that candle, and then you wait to see a retest of this from below, which is right there, right on the money. And then we wait for this one to get broken, and we're targeting D1, D2, all the way down to D2. Done. So that's a nice little 5-minute reversal. And we're off and running with, look at that. How many of you are on that Mark III? Look at that retest. How beautiful is that? How beautiful is that? That's a nice little retest. Heading for Mark III. Ooh, did you guys get that one? Tell me you guys got that one. Hi folks. Bench says hi. Good morning. Shepherd, good morning. Lucas, I think that would be nice as a playlist on YouTube. Everyone can review it over time. Yes, please put a course together. Would be appreciated. Yes, sir. Yes, please do course. Vitaly, thumbs up. What's a bull trap? A bull trap is when you have a range to run through. It's the first set of bull candles you'll find on the side when you start to run higher. So in terms of, if you see a swing low, for example, right here, if we see this swing low, you look to the left at the first, this is not a good example, but it still works. Look to the left, find the first candle that is an upward closed candle, and it must break it on the upside. Use it as a retest and go higher. Then look for the next one. If the one is buried inside the larger one, look for the larger one. As soon as the body trades above it, right there, then you want to see it retest. Retest, send it higher. A bull trap, you can run all the way up here. You can put a body right there and a wick, and you go, I'm jumping on that. And then all of a sudden it goes rip and reverses on you. The rule is a body must break this or this high. If it doesn't, you're about to get trapped. Let's just imagine like a big bull trap that comes in and snaps on your leg and then takes your toes off and trades against you. And you go, that bull trap bullshit doesn't work. Yeah, it does. But you'll see, you've got to get a body above it. See right here? Body breaks this bull trap right here. Comes back inside the bull trap. You usually put your stop loss I put my stop loss typically one tick below that low. If there's a swing low, or if there's a SIBI right here, I make sure I'm below the SIBI. It comes back in, it retests this SIBI, retests this order block. We don't want a body closing through the midpoint. As long as there's a wick, wicks do some damage, but you don't want to see a body get through that. It extends the range, pay yourself. If you don't pay yourself and get greedy and you think it's way up here and it turns against you and comes back and takes your stop, right, as in this case, you missed the reversal. And it's not my rules, and it's not my thing that's failing. You just did not, or you neglected to meet one of the rules. And they're not ICT rules. They're just my rules. So when you always hear me say the rules, are just the rules as I see them, not as ICT sees them. They're just as I see them. So I don't know. That's probably not going to help you if you don't understand the rules. But I think that's the whole point of making something that's clean, that you see it start to finish. It's going to take me a long time to build that, because I'm kind of perfectionist when it comes to teaching stuff, and it's going to come with lots of videos and audio and pictures and tons of examples. Anyway, let's move on. So anyway, we talked about this Mark III, right? So there's the Mark III example we talked about. We wanted to see it break this low, pay yourself at the low. So you pay yourself there. You're risk-free right now in this trade, and you're smiling. This candle's making you smile, right? But we're like robots. We want to trade with no emotion, even though you can just hear chinkle, chinkle, chinkle of all the money running into your account. So you can see how the dovetail of the overlap of Mark III with our principles that we're looking for, use those to enforce your rule for the Mark III. And Mark is in that this morning. Are you not, Mark? Yes, sir. Good morning. You're in this as a nice Mark III, right? I don't know if you heard my example of your entry, but that's how I understand your Mark III, and it works. It dovetails quite nicely with our stuff too. So, Paul, does that explain to you what a bull trap is? And the same thing occurs on the opposite side. You look for the down close candles for the bull traps. Because you remember, when you're on this side of the V, you're on the distribution side, and then the accumulation phase is on the opposite side of the V. Anytime you see these V's, that's distribution and then accumulation, right? Come on down. Thank you for the bull trap explanation. You are welcome. So what you have to do is you have to screen capture that, right? Like this is a bull trap. Nice, beautiful, clean bull trap. You have a swing. It takes out this little low here. It takes out this little swing point. It doesn't take out that one. So this bull trap's also referred to as what? What's another name for the bull trap? It's called the breaker, right? It's the last up close candles before taking out a swing point. So a breaker is the bull trap. The breaker holds price, and we want to see, this is how we're retesting it for our Model 3. Model 4, if we can get a fair value gap above that high. Look at that. Are you guys loving this or what? I'm happy for this. I'm like excited about this this number 3 right here. Watch that. Are you catching that run? We called that this morning right off of Mark. Mark, we're excited for you today, my friend. This is really good. So if you're tracing your stop loss down here right now, like if you're in profit and all you're looking at is the money over here and not looking for your objective, this is where you kind of zen yourself, kind of get yourself relax, breathe. You're in a great trade. Oh my God, I'm making money. Forget that. The trade is executing as you wanted it to. The setup was beautiful. The setup was nice. The confirmation was glorious. You got paid. You got money in your pocket, and you're letting the trade go. And you're just trying to zen out now and say, if this is my objective, I'm going to scale out a portion here, or I'm scaling out at rejection blocks. One here, one here, one here. If you've only got one handle on there or one micro on there, then just take the whole range. This is what you can do. Take the whole range from Mark 3 to Mark 3. Do this. I just came up with this idea. So this is like a take profit model 7 now. How's that? Take profit model 7. Watch this. And you say, here's the distance between Mark 3 and Mark 3. So if you're worried about what if it doesn't hit Mark 3, which like a large percent of the time it will, But if you want to protect yourself and you've only got 1 micro on there, 50%. Now take your micro and move it to break even. As soon as I took that out, I'd be break even and paid myself a portion. But anyway, 50%. As soon as it hits 62, move to 50. 70, move to 62. 75, move to 70. And then just wait until it finishes up because it's getting really close now. So we're looking for a full fill of this, right? So you're just kind of just moving it down. You're kind of tracking it and watching to see if we hit that Mark III objective. And as soon as it hits there, pay yourself, move to the sidelines, or wait for a bounce off of there to come higher because we're targeting that consequent encroachment next. I'll be right back. Let's see. Hey, you guys. Oh, look at that. It hit it perfectly. Do you love it? Look at this, guys. I've got my bread rising. Check that out. It's like exploding out of my bowl here. That's my sourdough bread. Like, holy crap, man. That thing is supposed to rise overnight, and that she's risen. I think we've done a good job. Oh my gosh. Are you guys catching this? Are you digging it? All right. How delicious is that? And we've hit the consequent encroachment of that now as well. Do you guys see that? That's consequent encroachment time. Once you're in a trade, play defense. Go find where it can possibly buy from. 3 for 3 complete. Whoa, nice, Darren. L. I need my trading career to risk like that. But that was a nice clean setup this morning. Like for a Mark III, like man, you can't ask for a sweeter run. And that's how many handles there. That's like right from 2,600 or 26,000 down to the consequent encroachment. So you went from like to like array from here to here. So the consequent encroachment to consequent encroachment, that's 275 handles, 263 handles right there. Now Mark gets to go and take his wife out for a dinner. That's a smasher day, man. That's move to the sidelines. Your week is done. 200 handles for your week. And that's all done in a matter of 1, 2, 3, 4, 5 minutes. Oh, 15-minute chart. So that's done in 2 hours. And most of that done in the last 15 minutes. I love it. Delicious. So now, what do you do now? Do you go, oh my goodness, are we still heading lower? So now what we're looking for is to see a retest of this. So now my question to you, who was it who asked about that, Paul? Where's the bull trap? Where's the bull trap? Tell me on this chart, give me the exact time, the exact candle that is the bull trap. If you understand what I've explained to you, tell me where the bull trap is now. You can just write your answer in the chart there or on the sidelines, and we'll kind of, you get to learn as you go. Ask questions. You get a little bit of my time, and I'll help you out with the explanations. Hard time for we did break the high. We only swept liquidity. We could see a major drop. Yeah, we swept all that liquidity. We talked about that this morning, right? All that's been run. That downside has just got so much more potential to run for, right? Look at that. Nice little pullback. Now your stop, you would have paid yourself here, or you would have let it trail all the way in. You get into here and it's come back and taken you out now. Even if you did that take profit model 3, or sorry, your take profit model 7. I'm just thinking about if you did this. Here's another way you could do this. Here's another way you could do this. This is how you pay yourself on here. You take the Mark 3 high to the Mark 3 low, the next one below it. You use your fib tool, pull your fib tool on this. I'm just coming up with a new idea here, stand by. You guys get to see this live. New idea. Tell me what you think. We're doing this reverse. So you take the whole box. As soon as you get into the trade, as soon as it gets to 25%, maybe, I don't know how that would work overall, but anyway, as soon as it clears the rejection block, takes out the low, pay yourself, your rule, wherever you want to pay yourself there. And then you're 50, 62%, 70%, you're already into it. So you start scaling out your profits all the way to the full closure. And if it runs back through it and you find another continuation or extension rule for the next Mark 3, then do that. So that might be the way I will manage that on the way down as a new take profit model 7 used in a Mark 3 setup. What do you guys think of that? So that's a way to kind of stay in your profits on the way down and kind of track yourself on the way down there as a, if it comes back and takes you out. So if you would have been 70, so you'd hit it right into that consequent encroachment there, you would hit 88% right on the money. How weird is that, hey? Right on 88%, and then pulls back into that little range. So now I want to see if we close below or above here, find some support at this, and start to eat through. Now you got to know where the go, no go zone is. Anybody answered my question about my bull trap, where the bull trap is? we're retesting this. So if this rolls over now, look for these lows to hold price and send it lower. There's no go, no go zone here yet. The go, no go zone would be back up in here. Yeah, that's a full fill. This would be nice to see it just tag here like that and start setting that lower. I trade a day. One trade a day will change your life. Yeah, I agree. That's a 15-minute chart. I guess we can get back down to a 1-minute chart. Watch this candle here now. We'll see if it closes above 760. Want to trade your life. Look for silver bullet now. I've got a few more minutes for a silver bullet, but yeah. Keep your eye on that little box right there and see where that next 2 seconds closes below, and it's below it. Now this becomes the go, no go zone. You want to see it tap this whole box in here and send it lower, looking for a range extension now. If it trades back through this box, then you've got consolidation. Wait for the upper and lower ranges to break before picking your direction. This is a great time to see a reversal back into this whole big run down. So just keep your eyes on those levels. Paul, 10:45 candle. Oh, that was in the 15-minute, right? That was a question I asked you. What's the 10:45 candle? AM down candle. This one, 10:45. We don't have a 10:45 AM candle. We haven't even hit 10 o'clock yet. But what part of the world are you in? If you do it New York time, it's the 8:15, 8 o'clock, 8:15. That's your bull trap right there. Okay. Look at the swing, and let's look back on the very first candle. That's my bull candle. Right there. If there's one next to it, include it. That's the bull trap. Also the breaker. The last two up close candles that break the low here, that is the bull trap. Okay. Now you want to see that hold and send it lower. So our 1-minute chart, we want to see that right here. Now roll over and go lower. Send it lower here now. And again, we've got discount premium right here inside the small range. There you go. Keep coming. Keep coming. I'm going to see it close below here one more time and take out this low. And then start looking for, now we're looking for range extension and then a continuation. Nothing is coincidence. 88% to the T. Yeah, it is. There's the lower, so pay yourself at rejection block. So if you got in on this for a short, you pay yourself there, move to risk-free because you don't want to see it come back through here now. You got a risk-free trade, so you're stress-free, man. That's the whole point of understanding the data points. You get yourself to risk-free because if it trades back against you, then you're on the wrong side of it because you know that if it breaks this side here, then I'm looking for this last up close candle, which is my last bull trap candle. I want to see go higher. Let's see, broke the low. Now tag the low and go lower. I'll even take a, oops, I don't want to buy. I don't want to buy. Let me just change that. And look at this. Trading View's back to its bullshit again. I hit that button accidentally. And I want to go to a sell. It's supposed to switch to a sell. Hit the wrong button. So there's the continuation. And I just missed. I don't know if it's going to take that one or not, but I pressed it twice to cancel the first one and then get the next one, but it didn't do it. So we'll let it go. So anyway, that's the next continuation. So I've given you this one here as well. That's the go, no go zone. As soon as that trades through here, it creates a no-go zone. So you want to see that hold, and it does, trades back into it, and then holds and goes lower. Takes out that low, pay yourself, move to break even. Now, right now that it's taken that out, I'd move into a profit. So you've got a bit of profit in your pocket. You've got zero stress, and you've got no losses in your future. Pay yourself, bottom of the 3 hour. Pay yourself there. This is range extension model we're going on, and I gave it to you right here. That's your range extension model. I hope you guys are nailing it today, man. We've given you some beautiful setups this morning. And if you're still riding the bus on this one, take profit model 5. You'd be way up here still. You just let that sit there now. And now we've got this new range extension. Your stop loss that's been sitting way up here would sit right there. And it would be relatively safe now. Because that now becomes the new bull trap right here. See how this little swing? That becomes the new bull trap. And then we'd have to see that get taken and the next one above you. So your stop loss would sit right here, because you don't want to, if you know if it breaks through here and here, that's a change in direction or market structure shift, and we're going higher. So you've moved from here into a super profitable, and you're sitting on the sidelines waiting now. See, I clicked it twice. I would have been in on that for a continuation, but anyway, it doesn't matter. Doesn't matter. We can afford to take misses as well. Oh, I pressed the wrong button. Pressed the wrong button. Anyway, that was the short right there. That's the continuation. So this was the extension right there. The continuation is a retest. That's continuation. So you got the last two models right here. Perfect entry, continuation, into a continuation model as well. So if you missed that one, you could have got right there for continuation. And that one, as soon as it hits your objective, move your stop loss to break even. It's now stress-free. Nothing is coincidence. 8 a.m. silver is picking up. Ooh, let's look at silver. Oh, let me turn off my engine here. I've been putting tons of work in on that engine, and it's slowly coming together for me now. I'm slowly, AI and I are seeing eye to eye. It's taken me, when did I start this thing? Over a month ago, almost 2 months ago now. Every day, me and AI are button heads, and most of it's about learning AI and how it works and its limitations. And it really is knowing how to talk to it. It really is. It's getting better and better trying to understand us instead of us trying to understand it. But once you can understand how it thinks and how you can kind of prevent a whole world of anxiety around its use and how it can make repetitive mistakes and how you can do workarounds with that, it becomes way more fun. I used to get so many iterations an error and error and error all the time. And now hardly get any. And it just does what I want it to do. It's great. Silver. Premium. We hit the premium box right on the money. Right on the freaking money. And then we get the reversal. Change in direction right here. See how that little body trades through it? Comes back into it right there with perfection. That's the short. So if you're going from here all the way down to the last candle, because there's no SIBI here, it's just this breaker or bear trap. This is a bear trap. So we want to see the bear trap get broken on the downside, give way, and go lower. So you want to see how the bear trap's not, we got wicks through it. We haven't got bodies through it yet, but we do have a box to discount. This mean threshold, you want to see that get taken on the downside? It does. Now I want to use that mean threshold as support to run lower. So it's stabbing down there, stabbing up. I want to see it start to drive down now and start getting into the discount portion of this. So we want to see a body break this. Otherwise that bear trap sends it higher. And you go, oh, what I wanted and what ended up transpiring. This does not mean we're going lower, even though I think it is going lower. Don't get psyched out by the candle. Wait for that one to close in the next 17 seconds. And if you've got fear of missing out happening in your guts right now, do not trade with live money. You are not ready for trading live money. If you got fear of missing out, you're in trouble. There's one. Bingo, done. Now come back, retest this all high. If it keeps running to our objective, you missed it. Don't sweat it. This isn't chasing it. This isn't, oh, I'm going to catch it now. You catch it right now, and then all of a sudden it reverses on you and squeezes you, and you feel the frustration of chasing the candle. So don't. This bear trap finally broke right here. Now you want to see a retest of the low or this candle right here before running into that discount portion. So if you're pulling your fib tool from low to high right here, and we're using that model, you have to ask yourself, if this was my targeted area, so I wanted to see it close below here and then come back, tag that, and then the 50% is my target. See how the 50%'s been hit? Now the 62%, let's get this back to where it's supposed to be. Oops. Let's get this guy back to where it's supposed to be. I got the inversion on here. See how you've targeted it already? You did not get your entry and your targets have been hit. So wait. You're into the consolidation now. So you want to see this breakthrough here. Catch this next ride down for a continuation on the downside. So look for your higher time frames and say, is this a run on liquidity? Yes, we've got a run on liquidity. So if we break through here on the downside, are we heading lower? What are we going to come back and retest? We already took these highs, came back, hit them and ran higher and paid yourself at that high. Now we're just looking to say, are we breaking these two down close candles here and using them as support? That's the 1 hour bear trap. You want to see if that's going to hold and send it higher. So you're right back into this consolidation. Cam 2 is right here around the 78% mark or 79% mark. And then look for a reversal here. If it closes through this, look for a run on these lows. That's silver. Look at that deliciousness. We've been a beautiful trade here now, even from this one here. It's a bit frustrating, but whatever. You have both models there. Both models, beautiful placement, perfect, zero stress, real quick, great draw. Now, where's our next target? Mark 3 down here. So we're looking for the next target. So you see how we broke through the Mark 3 here? Retested it right there perfectly. Continuation. Now you want to make sure we do not get a body above here. Now, if you've got the take profit model 5, you've gone from oh, you're still sitting here. You're sitting right there and letting that run. If you hit this objective right here, you can scale out some more down there. So this would be a huge drawback. You're allowing it to draw all the way back to the prime premium here, and it would take this bull trap with it, and that's what you don't want to see if you're still short. So you'd be giving up all of that from a number 5 or take profit model 5. You're giving up all this. You're giving this all a lot of latitude to grow and go lower. So from here to here, 50%. You're looking for all of this to allow it to head down for the next Mark 3 below you. I'm sitting atop with 2 contracts left to run. Oh, nice. 2 contracts. Beautiful. Good for you, Mark. And thank you again for sharing that with us. That's a beautiful, beautiful trade. Vitali, you deleted a message. I can't see that one. Could you go over silver on the 15-minute? Silver on the 15-minute. There's nothing there, man. We've hit the breaker. Look at that. Look at how clean that hit is, and the bodies are respecting it. Even the wicks respecting that breaker beautifully. So you're inside this range right here. You got 1, 2 bear traps overlapping each other. You got a discount array over here. This is a suspension block. Your whole suspension block sitting like right here. So if that suspension block continues to hold price inside a bull or a bear trap, consolidation. There's 50% of that whole consolidated range there. 50% is right there. You don't want to see a body trade through that. You want to see that go higher. It's got to stay above this. That's a cam 3. Cam model 3 entry. And here's your little suspension. No, it's not really a suspension block. It's just this volume imbalance to the bottom of this wick here. It's coming back inside that. You want to see that push through here now. I'd like to see something clean here now. We've come back. We've ran all the way into this thing, wicked all the way through it, which is not nice. Wicked through it twice, and then traded back above it. And then you want to see it go higher. It does, and then quickly comes back and wicks all the way into it one more time, and even through it. Right back to the bottom of this little volume imbalance again. So it's doing some real shady sugar stuff here. So I want to see that. It's got to leave from here now. It's done its business inside here. So all this constant revisiting, you got to be careful. That's why Mike was talking about it the other day. You get your face ripped off, it can turn on you on a dime. So inside that range, that's where you are right now. You've got to see this climb out of here. So you got to use these lower time frames to see where your entry is supported. So there's your discount. There's your premium right above you. So in this smaller range, that is box to box, and I'm expecting that to hit right at 88,445. That does not mean you guys go trading that, by the way. is that a little imbalance right there? If I stretch that out, I think that is. Yeah, it is right here. So if that's the first premium right there, it is. So you got to hit here, get above that, on top of that, and then reach for the next one, which is above us here. And then there's one more right there at that breaker. Again, it's consequent encroachment, just above the consequent encroachment of that, which is just above here, puts you in 75% of this wick. So I want to see this one, then targeting the wick, then getting on top of the wick with a nice body, preferably a fair value gap with a graded response, and then send that higher. That's what I'd like to see. But right now you're stuck on that guy. See how the body's stuck inside that little imbalance right there? And you've got to stretch your charts out and find these things sitting there. Those are important. Don't ever, if your charts are really tight and you got them really too small like this, you say, oh no, those are even. Then you stretch them out and you go, oh shit, they're not even at all. That's a big suspension block, right? So that's good. I want to see that climb on top of that, or just run straight to our objective here, which is 844, I think I was going. And if you got one lot on that, even that alone is a couple of grand. Just this 5-minute candle here. Mark 25,416. 25,416. Yep. That's the next Mark 3. On silver, I keep pulling back to silver here. On silver, on 1 hour and 2 down candles, please explain how they work for holding support to go higher, or if they break, go lower. Is it just the body or the wicks too? On the 1 hour? On the 1 hour chart, this one over here, let's have a look at this. So now the bull trap is the key play for me. You want to see this bull trap break to the upside on a close on an hourly candle. And it did right there. That hour closed right there, just above it. So we come back in. The wick, this whole body right here. So we could quite easily come all the way back in, right into here, and then go back higher. That's still bullish. I like to see a nice displacement above here. I don't like seeing a small little tiny candle like that, but you know, it's the rule. It made it. So now you want to see a tag on that high. Take this wick, break it into quarters, and then watch the strength of that. For example, if you take the wick here and you pull all the way out to the edge of that, which is right there. See how we close just above it right here? I'm going to open this up so you guys can see this. Tighten up my... See how the body closed above that and it opened above it here? That wick, 25% of that wick's way back here. So that's 40, it's almost 60 cents, like 55 cents, all the way back to here. So there's 25% of the wick, then 50% of the wick, and then you start getting into these little imbalances down here. See where they are? So that little wick right there, that's it. It's done its 25%. You want to see strength now and go higher. And this wick stuff is what's killing people. And you've really got to leave your stop loss way down. So for here, this candle, if that was a 1 minute chart, we'd be putting our stop loss down here. So what's your leverage? So you have to calculate your leverage in terms of how much money, if I'm only putting 1% of my account, let's say you got $1,000, 1% of that account is 10 bucks. So you've got to have a $10 drawdown right there. That's where your stop loss is to be. So if one micro puts you at $100, That's a 10% drawdown. You don't even want to put a micro on that until it gets down into a $10 range that you can actually put it on there. Right? So if that distance right there is too far for your minimum entry to go on, then you have to decide whether or not you want to take that, or you want to risk 10% of your account. For example, do you want to risk $100 for it to roll over and come down? Then you better be watching that real tight, because if you see the reversal on the lower time frames that say, if I see a market structure break, you got to have a fail safe. You've got to have a fail safe. Michael never talks about fail safes. He only talks about stop losses. Fail safe is knowing specific data points that if they fail, you know your stop loss is getting taken. And the stop loss is only there to cover against a radical quick reversal on you. And even those may not work, because if they gap down below you, you pay whatever the first printed price is below you, right? And a lot of people don't understand that the fail-safe is literally watching that specific data point. And you'll see me pull, a lot of times you'll see me pull my stop loss up and say, I don't want to see it break that point. That's my line in the sand. And it literally comes down right to it and then leaves. You've seen that multiple times on my trades. And you go, how do you trust that that's going to hold? Well, that's the point in which I see price turning and come in the wrong direction. And if the wick takes me out, it takes me out. It's not acting the way I want, right? So, sorry, your carrot. Hopefully that makes things a little clearer for you there. Vitali. And that candle's the important one for on the hourly. And I like to see a body get above here. No different than that was a 1 minute chart or a daily chart or a monthly chart. It's no different. Zero difference. Zero. 15-second chart, no difference. Gold, silver, hockey pucks, whatever you're selling, whatever's on the market and it's traded through the exchanges and is on produces candles and is on the algorithm, this is what you're going to see. Doesn't matter what it is. And we are looking at Tesla, the same thing with Tesla. When we were looking at this the other day. Remember this level right here? We wanted to see a body. It has to break that level, right? On the downside. See how it doesn't? The body's totally respected here. And then send it back up inside that range. We ran above it. Now you want to see this act like a go, no go zone. So you're either going to go higher or you're going to break it, come back into this last couple of down close candles and start targeting our little box that we have down here. So we had premium box, discount box inside that range. We were sitting in the middle right here yesterday. So we've hit the premium portion now. We've come back into the little no-go zone right here. And it's overlapping with a bigger one right here. So here I wanted to see it go down and start heading for the lows. Once it comes back in tag, I want to see that extend. It doesn't extend. It literally trades back through it and then trades through it. Now you're stuck, right? Because if you have this little no-go zone overlapping a big gap, this no-go zone, if you trade through it and through it and through it, you got to wait for a market structure shift. Otherwise, this is the consolidation that beats you up. And there's times where you're going to say, all right, now I'm going to go long. And it trades back below it. You go, ugh. Now I'm going to go short. And then it trades back above it again. You go, oh, now I'm going to go long. And now you finally make something. So you're just going to keep getting beat up every single time. So if you take it, if it trades through your thing once, like I'm looking for this to go short and then it runs through it and goes long, you try it one time to go higher. And if it doesn't work, it trades back through it again. Wait for the market structure shift. If it takes out the high, do we come back and tag it to go higher? Nope. You don't get to tag it to go higher. So then you just wait for the next zone right here to break. It does close slightly above that right there. What's the low on that candle? It's 2320. the close on this candle. 2, 3, 3, 1. So that closed above there. Then there's the retest, and then send it higher. So you got to know where your little zones are. Changing direction. Trades through it, trades back into it. We go lower, trades back into it one more time. Still going lower, targeting our breaker here. Takes out that high. We're in the middle of the breaker right now. And now you're bouncing around between this breaker and this bull trap. So you want to see the breaker, let go, market structure shift, use this as support, and then push lower. Otherwise, small little consolidating area you don't want to play in for Tesla. Let's get back over here. On silver, Did you get that, Vitaly? Thank you for that. Noted. Okay, good. D says hourly order block on NQ. Hourly order block, he says, on NQ. Hourly order block on NQ. Which order block are you talking about? You can't just call them an order block. You have to tell me what one. This is a block of orders. So it's an order block. What one are you talking about? Are we looking for a breaker? Are we looking for, what are you looking for? A propulsion candle? We're back inside the hourly over here. I see this. I see what you're looking at here, D. Right here. We're back inside this little breaker right here that takes out this low. So we're back inside this old bull trap that gets broken to the upside. We're finally coming back to refill it. See how we never tested it again? We went higher, rolled over, and we're coming back to retest it. If we close below the mean threshold of that, look for this one to get retested as well. See how they opened and closed on there? That's that debate, man. I love that one. That one's a real, you guys got to set your rules around that one. And you're targeting this box. That'd be like a box up here to a box down here. Discount box. D1, D2. There's a D3 right here. So eat through that. Close there on the next hour, which is another 37 minutes away. Then start targeting here, which is right. And our next Mark III happens to, look at this. Look at the consequent encroachment of this Mark III and tell me this doesn't overlap. There's the consequent encroachment. Look at it over here. That SIBI finally filled in the next Mark III below us. Got some nice shorts using the dark pools, Darren. The inner circle trading caught some nice shorts using dark pools. Yeah, I haven't looked. I couldn't get your dark pool indicator on here. It didn't come in. It's not even in here anymore. So I can't use it. But if it worked for you, man, I really hope it works. I hope it continues to work for you. And thanks for trying to share it with the community anyway. I do appreciate that. But if you can get it over to me, I'd be more than happy to give it a run. And I can always push it on here for you if it's here to help people and then it's ICT related. I'm here to help you. I'd love to see you all succeed, but old YouTube, by the way, not my new Chosen Trader account. He's shamelessly promoting himself here at Chosen Trader. Thank you for that. Noted. You're welcome. Daily goal met on the ride down. Sorry, on ES. Oh, you're on ES, D. Okay, that helps. Yeah, that's the bull trap there. See how the NQ is already running through its downside? And ES is just coming into it now? So its mean threshold is sitting right there, right on that, the bottom of this old gap here. That's where it's sitting at 69.52.5. 69.52.5. And then if it eats through that candle and half this is your next objective, then look for a target down here and see how ES has already said, screw that noise, I'm heading there right now. It hit it already. See that? That's the downside. That's D1, D1, D2, D3 is down here. Delicious, my friends, delicious. Did you catch any of this? This has been a beautiful run this morning. And if you're just lightly coming in to this nice feathery landing here on Mark 3 times 2, I hope you've all been able to benefit from that today. It didn't take me in for my entry, but I'm happy that you guys got that. Paul, good morning. I'm gone. Have a good day, family. YouTube. Is that Paulette? Oh, it is Paulette. I keep calling her Powell. I thought that was, okay, that was Paulette. Paulette. Totally didn't dawn on me that was Paulette. It's a shame. She's a sweetheart. Here, so now we see got this little change. So now you've got this and that. So that short you had up here, or your take profit model 5, has gone from here to here, because we have a range here to here. That's the new range. So your stop loss sits above here, because if I break above here, then that takes out my bull trap, and then we have a market structure shift and we start sending it higher. That's what take profit model 5 is about. If you like what we're doing today, thumbs up, hit the thumbs up button, like button, notify. We're here every day for you. Help you try to read price action clear. And is Herbert still in here? Are you still watching Herbert? Or have we massively confused you? There's the change in direction right here. We've retested. We're back up inside this range now. You want to see this bull trap hold price. If the bull trap doesn't hold price and we get through it here, we may not be reaching for our Mark 3 just yet. We bounced off yesterday's 8:30 candle. Hadid's 8:30 open. How's that, hey? I didn't even look at today's. How did the today's work out, Hadid? I haven't even looked at that yet. Let's have a look at that. Let's see if we got the Hadid 8:30 set up here as well, so you guys can appreciate Hadid's 8:30 candle and Mark 3's. That's Hadid's 8:30. I'm going to leave it in blue right now. So typically Hadid's 8:30 runs. You take out a low, these lows, then you want to see it take the highs, come back, test it, and go lower. Or sorry, higher. If it's takes out the highs, takes out the lows, comes back, retests it, you're looking for it to go lower. In this case, it took out this small little high here, but did not take out the overall highs. But we traded through it. Oh, there's the 8:30. So we ran, oh yeah, I guess that would be a run above or here. I don't know how Hadid defines which high it takes out, but that took out its immediate high. It took out a previous high. Ran lower took out, it's a little short-term immediate high, a low, ran back into it, and then sent it lower. So I don't know how he actually calls what specific high. He hasn't specified what high it takes out. But if that was doing what I understand Hadid's to do, you look for a open. It trades down, trades back up, takes out a high, takes out a low, comes back, retests it, and goes lower. Now, if you're still not sure, you say, did that really take out anything, or is it just sitting in the middle of the range here? Wait for the market structure to shift then. So if you can't find his pattern in this, then you look for the market structure shift. So there's the market structure shift. Come back, use that for your range extension model, and it's perfection. Like, you can't ask for a better entry than 25,976, and it's right inside the Mark III. Off you go. Now you stay on a Mark III. Switch over to your 15-minute chart now, and just let her buck. Let her run to your Mark III. You hit the Mark III. We talked about those levels already, and then you got a change in direction right here, but your stop loss is above the bull trap. Wait for it to close below here. It closes below, retests, goes lower. Again, closes below, retests, goes lower. So even if you were in that and saying, I want to catch this as a long now, and then it trades through it, you go, I'm on the wrong side of that. Get back in sync with it. Now you go lower. So even if you took a small loss there, I'm looking for this to go higher, and it runs through the downside, you go, I'm on the wrong side of it. Get back on the right side of it, go short. And if you're not absolutely sure, wait for that to break and say, now I'm on the right side of it, keep coming. Aim for the next downside box. Simple, simple, man. Discipline, discipline. Stay on your discipline side. Crazy Ivan is Crazy Ivan. I love a good old Crazy Ivan moment. Crazy Ivan. There's 27. Isn't 27 beautiful? Look at that. Bing, right inside our little breaker. Isn't that sexy and cool? Time in a bottle. And we're aiming for here. Look at that. Bing. Now we've got 30, 32. There's 32, making its little low. Running back higher. There's Crazy Ivan. Look at that. It's Crazy Ivan time. So that little dot should be sitting down here. Should be a little triangle right on the candle time, marking that low. So 30, 32. So you're looking for 36, 38 now. So we're going to wait for Crazy Ivan to finish doing what he's doing. Crazy Ivan. Hans always reminding me about the lurking Crazy Ivan. Herbert, you're still here. Good man. I hope you're making notes. Hope you're doing lots of screen captures. Screen capture, make your notes. Start a big ass binder full of notes. I now take my screen captures, my notes, and I put them on my iPad. So when I go on traveling, I've got them saved in a file, and I've got hundreds and hundreds of sheets to go through. And new theories, I put them on there, subfile, new theories, new ideas, pop them out there and studying them, test them, back test them. When you're on an airplane, just back test it. It's great. Pay the extra 20, 30 bucks for your free Wi-Fi. So you're doing an international flight. Pay the 30 bucks for free Wi-Fi. You sit on the plane for 10 hours and study charts, man. How exciting is that? And you get to go to your destination. Your job's in the air. You're trading 40,000 feet off the ground. How many other jobs let you do that? Other than being a pilot, of course. Not a clean setup today. It's still working. It still works. You know, I see it from your perspective there. I just don't see the like it looks like it runs down, comes up, takes out the highs, comes back down, takes out this little low here, but you're just in a small range. So it really, especially when it's happening inside the 3 hour as well, you want to say, oh, now let me just see it break the low on the 3 hour, come back and retest our breaker. It retests the breaker. You go, now I'm going to go short. My stop loss will sit above that consequent encroachment of the 3 hour candle. And as soon as it breaks the low again, move to break even. Now you don't want to see it come back there and let her buck. And that was a beautiful day for that today. See how that take profit model 5 that you were in here? You make these big drop downs as soon as new ranges are established. That's an established range right there. Your stop loss would sit here. So as soon as that is broken to the downside and a new range is established, you can now move your stop loss to the next new range. So take profit model 5 is really about staying on the opposite end of the range, giving it enough room to grow. If you have a downside objective that you're pretty confident is going to get hit. There's our D2 filling in. What is our ES doing now? See how ES is failing to reach even the consequent encroachment or mean threshold of that last up close candle there? See how it's refusing to dig down there now? And NQ is like, no way, man, I'm charging down. I'm going to tag my D2 discount box. Now you're looking to see, is this going to pull price back up, or is this just crouching and then going to take another dive down? So then you go down to the lower time frames to answer that question. We go down to the lower time frames and say, what candle needs to break for us to think that this is going to be at the bottom right now? And you know how Michael likes those 5 and 15-minute candles? Here's the 5-minute, and here, let's do the 15-minute. So what candle needs to get broken on a 15-minute to show you that this is going to be more upside? We need to see this get broken on a close and then find support at it to push higher. If that's the low on the hourly. The 5-minute, we need to see this and this. They're literally overlapping one another. So I'd want to see that get broken to the upside. And I start targeting the next bull trap above us here. And yeah, so right now there's no indication that it's going higher yet. So that little bounce you saw right there, a refueling, getting ready to run down lower, because it's got to come back quite a significant amount before I consider that the low. I don't know if that makes any sense to you guys or not, but still looking for the target below you. So you're just kind of giving it lots of wiggle room now. So that's that 4-hour block we looked at this morning. Remember I blocked it on there, that 4-hour? That's the consequent encroachment of the 4-hour. Not clean setups today. Where are we at here? Crazy Ivan time. That's 27. Oh, that was the 32. Oh, I did give you the triangle eventually. Okay, good. 35, 36, there's 38. Crazy Ivan is completed. He's come looking for you and now resuming his course. Now he's got to make the decision at 40.42. Ivan's pulling the trigger. So your take profit model 5 is sitting right here now. That's the range you're in. There's one right there. There's one right here. And your discount, premium discount inside that box. There isn't one here. So you're sitting right there. If this bull trap lets go, there's your first indication it's coming for the premium. And then if that bull trap lets go, it'll come get you and you're out of your trade. If you're using a take profit model 5, that is. And then if it reverses on you, comes back down, look for 11 o'clock. So this is the lion's share of the day, of the run at 9 to 11. So if you've got that, be happy with that. If you're sitting around salivating, can't wait to get to the next one, just be careful that you don't have that gambler's addiction. If you can make your money and move to the sidelines, just think about it like it's your job. At the end of the day, you close up shop, close the doors, pull the shutters, and go for a walk. And that's it. That's your day. It's done. And you've done that all in a couple of hours this morning. You've made your couple of grand. And you go and enjoy your life, man. And don't obsess over the charts. Just wait for tomorrow. Come back and let's do the same thing again tomorrow. And it's not always that easy, obviously. You've seen me get beat up quite a few times. But consistency. Just try and stay consistent. Follow the rules. Russell's rules of life, my friends. Be rigid with your rules and flexible with the market, and not flexible with your rules and rigid with the market, because the market will break you. And if your rules are flexible, it'll destroy you. It'll bend you till you break. Be very rigid with your rules. That's why you must demand that price give you that specific levels. If it doesn't, don't trade it. Move to the sidelines. And if you take a couple of hits, you feel that anxiety building up inside you, close the charts and walk away, man. Because now all of a sudden you're emotionally engaging in the market. Wrong place to be. I found myself doing that yesterday in silver. Silver kept switching up on me, and I was taking some losses. It's like, okay, I got to walk away from this. I had to walk away and then come back, and luckily in the middle of the night, just before I went to bed, I got another, that big punch through was the run last night. That's all I've done this morning, so it hasn't been a huge morning, but hey, man, find your entry. As soon as you find your entry, you find your setup, make it clean, take it, watch your risk management, all that stuff. And remember, like Michael said, man, you got to be careful in this market. It's crazy and it will tear you apart. It preys on those people who are gamblers right now, because it kind of gives you that idea that you're going to get it, wham, and it trades back against you and takes you out. And if you're not watching very clearly on how to stay on the horse, it's going to flip, it's going to turn, it's going to kick and throw you off. That's why we spend all this time in here on a 1-minute chart, getting into the trees, into the leaves, as my buddy Gary would say. You're in the leaves in the trees, man. I'm in the bugs on the leaves in the trees. And that translates to the trees will die if the leaves don't work. So this is it, man. This is the life pulse of the financial pulse of the planet. We are watching it as it goes. And like any good paramedic, if you can read a cardiac strip and you know what's going on in the heart, you can tell what blood vessel in the heart's affected. I could look at an ECG strip and tell you what blood vessel in your heart is affected just by looking at those little blips there. Is it anterior descending, right circumflex, coronary circumflex artery? Is it the right anterior descending, or right coronary artery, right anterior descending, the left anterior descending, circumflex, all that stuff. Anterior, posterior, can tell you where all that is just by where I put my electrodes. So that's what we're getting into. That's why I love this. You can read it, study it, and you catch yourself some sweet little runs like that today. 40 point short here. Way to go, Russell. Rejection box, please and thank you. Show me 437. Let's go, Russell. Let's go, man. Whatever reversal happens should be a short-lived, in my opinion, 50%. So you see how we're just going from take profit model 5 and it's moving down to logical levels of support. So now you think about that. You've left that really go big time until you get a new range extension and you go, oh, sweet, now I can put my stop loss here. You do these big chunk drop downs and they're like major profit. You say, no, I don't want to see that. And we're getting into the end of our trading cycle and your ass is protected. But you can see on higher time frames, you'd be holding that for weeks and giving it room to grow. Now that's really huge. Imagine if that was on this was all daily charts and you're sitting up here and this was daily charts. And it finally creates our SIBI down here and our BISI here. 2 months later, you go, now I can finally move my stop loss into here and let it run for another few months. And then go, now I get to drop it down into here. And it's just consolidating. How many of you have the discipline to do that on the higher time frames? It all is just a new ways to explore your greed level. The greed, the monster of money. And you're trusting of a certain level. Now, Mark, are you still in here? Is Mark still in here? No, I've got an idea. It just popped into my head. I have to write this down. Write it down. I'm out now, but still think price may go lower. Looks weak. Yes, I'm here. Have you thought about your Mark III fractally? In other words, have you thought about it on multiple time frames? Because if this is a truly fractal algorithmic play you've got going on here, it should be reproducible on any time frame. Next macro is about to begin. So watch, see how we've got this market structure, this little consolidation, and we've now got a candle that's popped up above it. So we've got a change in direction. We've got this bull trap that has now been traded above, and we've traded back into it. So now we've got the next bull trap and our last section on our take profit model 5. If that gets taken to the upside, look for this to continue pushing higher. And that would be it. That 8:30 yesterday was the bottom. For now, we could still run down there after lunch. I've got an idea for your macro point of view on that, Mark. I'm going to back test it first. Then I'll bring it to you and share it with you. I've got an idea that may help you there, Mark. And when I'm finished building out my my bot, I've got 3. I want to do all 4 models on my AI and have independent indicators for each one. So each indicator will be a trade model. And then I want to work on Hades. I want to do the AI for Hades one. I want to do the AI for your one. But if you've already got it, then sweet. Because you'll have your own set of rules around that and finesse points that I don't quite know of yet because I haven't really studied your trade model. And then also a CAM 3, CAM 1, 2, and 3 AI indicators. They'll all be indicators for each individual one. It just takes some time to understand AI in order to do that. But we're getting there. I'm like so close to nailing this sucker now. It's already nailing trades. Like, I'm like, oh, sweet. It's catching trades so sweetly right now. I'm just finishing up. I think it's like a 7 phase or 8 phases to the bot. And it's presently in phase 3. And it's already nailing trades in phase 1 and 2. But anyway, not yet ready, but it's looking really good now. Are you using AI for your bot as well, Mark? See how the stop loss is sitting right here? We're giving ourselves some wiggle room. I think I said down here too, you would have been taken out there. If you're still sitting above this one, then you're still good. Changing direction again, coming back into this candle here. We've already tagged it once, and now you've got to change in direction. So I want to see if this mean threshold gets closed below. Then you've got this bull trap here that hasn't been hit yet, that we're expecting it to get hit. So I'm inside this range, 50%. Pull your fib tool. You have to do these real quick because we're in these small little ranges now. So you got to say, where am I in here? So there's 50% right there. And now you've got this run out these highs, change in direction, change in direction inside this range. So if we trade back up into here, roll over and go lower, you can see how you can go from box to box. There's a small little imbalance down here still. Stretch it out. You'll see it sitting right there. So if you want to be in a premium, you want to see it come back into here or here, catch that for our first target. Now, if the first target gets hit and bounces off of there, you got to say to yourself, am I just coming back to retag this and go higher? Or am I going to run through this, hit 62% and start running for this box down here? And then if it hit that, I haven't hit these. See how that one candle went through 1, 2, and it didn't go through this one. So I expected this candle to come back into here. It didn't. It kept coming lower. It's dug right through that 50% mark. Now, internal range of liquidity has already been run. Your target's already been hit. You decide here. This isn't a Darren decision. This is, I'd stay out of that. Your target's been hit. You didn't get a chance to get in on that unless you're on a 1 minute or a 5-second, 15-second chart, catching a reversal here to that target. You wait. So there's the retest of that one. See how we come back right back down to the last little bull trap here, the first one after a swing right there. Look at that precision. Tap it, come back higher into that premium. So what you want to see now is this, for this to continue going higher, I want to see this premium box get traded through. We just hit it right there. You want to see it trade through there, find support at it, and then look for extension and then the continuation models. So you got 2 more models to hit right here once you close above here. That's 601. Good eye there, Mark, or Russell. Yeah, you're using AI as well. We should get our heads together. I'll kind of give you some of my secrets I've been using with AI to kind of cut down on the number of iteration errors that it creates, especially in PineScript. Watch this level here. There, see how we've traded above it? Come back and tag it. And this is right around 11 o'clock too, so just come back in there. I'm going to put a couple on there. I'm not going to go too crazy. We're too late in the morning. You put a little love on that. I'm going to go right there with a 2. Now wait for the body to close above here. That's your range extension. It just did it right there. Now we want to see a continuation model. So watch how this candle finishes forming now. As that finishes forming, I want to see a body close above here, create a fair value gap, and the very next candle, create a very small little candle that creates that BISI right here. Because then you've got to think 2 things. Have I run above the high, and am I going to come back down below, targeting the SIBI box to box inside the new range? Or, and this is great right here, there's a retest, come right back into here. I'll take 1 buy long there, and stop loss now, I'll close that one out. Stop loss will go just below here, and I want to see that take out its own high here. And I can take one off there at the first high. You're a genius, D, putting all this together. It's obsessing over the I'll take one off there. Now I'm going to move my stop loss to break even. I don't want to see it come down here again now. I'm out. They're not, those aren't like, so what, it's 280 bucks, who cares? That's not the point. It's about, I want to see this go higher now. So this mean threshold is the line in the sand I don't want to see. So I'm going to put this in here, and it's I'm being really skittish right now because I don't want to see this. I don't want to see this right there. I don't want to see that get broken to the downside. So we're going to watch this point right here. Watch right there. See how it's coming back and revisiting it? Watch that tap. Now it's got to go higher from here. Go, go, go. Demand price goes higher from there. So stop loss will be sitting there. Fail safe is right there. That's my fail safe. In other words, if it breaks that, then I know we're going to come back and revisit this. So it's got to leave here. And if it takes that high out on that wick, then I move to stop loss to break even and pay myself at that first high. See how it's even coming back in here? You don't want to see that. Go, leave, let's go, get out of here. That's the demand on precision you want to see. And see how we've tagged it? And now we're waffling here. You want to see it explode out of here. And think about where are we at in time and price. Time and price. We're just coming up for 11 o'clock. What happens at 11 o'clock? We tend to have a run on previous 10, 10:30 significant high or low. See that? Come back again? No thanks. But watch. Watch, watch, watch. We don't want a body to break through here. Takes that high, move to break even. This does not mean take this trade, you guys. I don't even like the waffling it's doing right now. You want to see clean price action. See that? It comes down, tags it, and then leaves. That's what you want to see. Intention. This is not, I've tagged it once. Look, once, twice, 3 times, 4 times I've hit that level. No, thank you. You're not acting the way I want you to. So if that switches up on you now and you guys are in that long, you're taking a chance I wouldn't take. That's why you saw me pull that up. As soon as it comes up to that high, slam it right up against it, say, now you can't come back and revisit it. It does, forget it, not interested. See how now we're trading below it. See that? So watch now, expecting to see it come back into this zone here now. Derek, welcome to the party, pal. Welcome to the party. Yeah, it was a beautiful run this morning. Mark III was magic. And we're just getting a bonus Mark III out of this if we can, if it continues to go lower. We could collaborate on this. I'll give you all my tricks. I'm adding in right now. I have it at 68% with a 6% drawdown. Ooh, 6% drawdown. You've even got specific drawdown in there too, hey? Okay, let's have a little chat, Mark. You can, are you on our community chat? You can give me a DM me in that community chat there, and we'll do some collaboration. See how we're targeting that area now? We traded below it. We're using it as support now. We've tapped into this little guy right here. We tagged it. Now, are we going to continue to run down to the consequent encroachment of that? So I take this and I go, one of the more common areas I like to see this retest is the consequent encroachment, which is right here. And I'm looking for right there, 8775. 8775. And the last one is 575. Right there. Ta-ting. See how we saw that? We talked about that right there. Didn't like it. Here's why. Fail. Coming into this level. We're right into that level. Now, I want to see if this turns into a go, no go zone. We flip it into a go, no go zone. So that's what we're looking for continuation. That's why I pulled the stop loss tight. As soon as it gets there, the rule is pay yourself there. So we paid ourselves and then pulled the stop loss up tight because it's like, hey, you done your thing. I don't want to see you come down, right? So we only managed to get a couple $100 out of that, right? And it was wrong. That's the rule. Pay yourself at the most recent high, which is the candle right behind it. And then if it fails, then we can expect a revisit of this. And that's exactly what we just got. It failed right there, revisited it, came back down into the zone. Now I want to see if this turns into a no-go zone. Does that make sense to you guys? Do you understand the logic of that? I know, Herbert, you're looking at that going, what the hell is he talking about? But we're showing you a level of precision that you're going to find quite difficult to find anywhere on the internet right now. This is crazy detail. It's not for the faint of heart, for sure. You have to understand the basic principles of what ICT teaches and order blocks and data points inside candles. Otherwise, you will not have a clue what we're talking about. You got to study that. Make cue cards, study it at work. See how that's now become the no-go zone right there. Ting, go short. I'm looking for range extension now. That's now become a no-go zone. I have to create a new box. I have to create a new box and a new setup. Watch. I'm making a new template. So you guys make a new template now. Follow along with me. This is new for me as well. Let's make a new template. Let's go. Let's do this first. Settings. Add this to your template chart. We're going to extend it to the right. We're going to find a nice pretty little color that you like, that doesn't interfere, that doesn't create my weekly chart. My daily chart is set up on blue. My red chart, I think this is red. That's my red anyway. This red chart, I think this is the Roy G. Biv, so this has got to be red. Red, orange, yellow, green, blue, indigo, violet, that, you know, that whole rainbow spectrum, that's got to be red. So that's my red side. That's my monthly. This is my hourly, minute, or this could be hourly here. Hourly, minute, 15 minute, 5 minute, 1 minute chart, 4 hour chart, daily chart, weekly chart, monthly chart. That's how I use my colors, in case you're wondering. Okay, so see how we're getting a retest of this go, no go zone. Trade below it, trade back into it. Now send it lower. Now we're looking for rejection block. Pay yourself. Looking for low, targeting here. This is just take profit model 2. Sorry, 3 and then 4. We're internal range liquidity hunting now using take profit model, or sorry, model, trade model 3, and then trade model 4 will be our internal range liquidity hunt. And then we're looking for trade model 3 and 4 again after we break this breaker. After we break the breaker. So how are we going to build this? So what we're going to do now is we're going to go a nice little pretty, maybe put it in here like this, maybe a yellow. We're on this chart. Maybe we'll just make it with no background. How's that? We'll keep that border, we'll say is black, and we'll make it very thin. We'll call the border just a little thicker so it stands out for us. We're going to put text in here, and we're going to call this the go, no go zone. Beep, beep, beep. Go, no go zone. Then you want to go templates. Then you want to say save as go, no go. Save. Okie dokie. That's your go, no go zone. And you see how it stays with us right here. It's justified to the right. Get AI to do that. Get AI to create a box like that and put the no-go zone in there. It ain't as easy as you think. So we've hit our rejection block. So have you paid yourself? If you got short here, have you paid yourself at rejection block? Because if that turns and goes all the way back through here, here's that thing I told you about earlier. If the no-go zone is not supported, if we start trading back through this and close above it, you can catch one catch off of this premium box here to go higher. And if it rolls back through it again, you're in a consolidated area. Move to the sidelines and wait for structure break above or below price. Right now, I still want to see it go below here and target this down here. So I'm looking for, I'm going to move this guy right here. Watch right there. Did you pay yourself? Pay yourself. And look at that. It's on a 9 candle. 9-10 turn. Boom. Go, no go, man. Gotta love it. That's a nice little short. Could we collaborate? We could collaborate. Yeah. Is there any beer left? Yes, I'm in there. Okay, great. Yep. On tap, Derek. Can you imagine the numbers if D were to provide a beer to everyone who attended? Well, everyone who attended, it would be like 21 beers. That's a 2-4, man. I can afford a 2-4. It's funny, we haven't really increased the size of our subscriber base, and we're giving out some amazing detail. We're giving out some incredible, even if we just use this as a signal service, which you shouldn't be. We've got 1,255 people, and it hasn't grown. It's pretty much stayed that way for last 4 or 5 months. That's okay. It keeps a nice little quaint, quiet little community. It's like Russell was telling me in Toronto. He goes, you know, it would be nice to see your community grow, but I'm kind of glad that it's not, because then I can actually have my little chat on the side and ask questions on the side, and it's not ripping through tons of conversations so fast that you can't get your question in. So it kind of keeps the quaintness of the community. But it also, if it does grow bigger, then you still have the Telegram to chat there as well, because that's not streaming through like insanity. And there's been like over 100,000 chats in that thing already. How many have I got in there? 110,000 messages. 110,000. You guys are chatting up a storm in there. Love it. I love it. And that's after deleting the history a few times since its inception. Anyway, there's the 9-10 turn. We took out the low. Pay yourself. We didn't quite get to we're just shy of our objective right here, discount box. So now you see there's a little change in direction right here after taking out a low. We have a bull trap sitting right here, overlapping another one. So look for this to provide support. You got to get a body above here. So now this would be a classic watching a bull trap fail. So you get a bit of a wick up here, then it fails and comes lower. See that? That's what you want to see, it fail and come lower. Now you want to see it fail through here. Otherwise, this is just coming back, retesting before taking out the bull trap and setting it higher. Targeting upside objective right here. From there's P1, P2 here. You're right inside P1 and still inside the go, no go zone. So here you've got no go zone, bull trap. We start trading up through there, come back and tag these and send them higher through here. Then I'm looking for a continuation on the upside, taking out our trailing stop on your take profit model 5 if you're here instead of that one I was talking about earlier there. So you can see how we're starting to switch things up now, and we're changing our minds real quick because the market's getting tighter, and it's getting around lunch hour where things start to get choppy and messy. This is how you stay on the horse. See how we've traded above that bull trap? Now I want to see if that bull trap holds price or if that was just a run and this bull trap held you back. When they're overlapping like that, you got to be careful. Look at the last one. Get above that. Its mean threshold already been traded through. So we're retesting this to be below us. And now I want to see if we close below here. Because this now becomes the new no-go zone the moment we trade below it. And we're looking for a range extension, targeting this little line right here. And if you didn't follow my logic there, go back and play this video again. And if you understand what we've been talking about every morning, you'll see why this is just a repetition of what we just did here, there, coming down, up, take out that high. It's got to find support. If it doesn't, then we're going lower, looking for a retest on this one. We ran to it and through it. Now I want to see it retest as a no-go zone and come lower. Look for a rejection block and next run lower. It's rinse and repeat over and over again, man. Play that part over. So look at the video at 2 hours in and you'll see the logic of what I'm talking about there. That's how you stay on the horse. And you got to be prepared to stay on the horse. Here's the retest of the no-go zone. That's the new no-go zone right there. And see how tight it is? That's how quickly you have to stay on data points. If it trades back through that level inside this BISI and closes above it and closes above the BISI, look how tight this has got now. It's bouncing around inside these data points. I'm looking at the last data points I'm looking for is consequent encroachment, or sorry, mean threshold and mean threshold of those two candles. There's only one overlapping SIBI-BISI candles here. So if this is got strength now, I want to see that, or it's heavy, I want to see that drop through here, take this rejection block and start targeting our next objective below us. If it closes above here on a close in the next 33 seconds, look for mean threshold. There's the mean threshold. Now it's got to kick off of there and start coming back down to mean threshold, like to like inside this range here. Because this is in the middle, you have to go to the upper and lower candles because they're overlapping. You can't play box to box trading in here. They're literally overlapping each other. So you have to use candle to candle, and then you have to use the data points within those candles. So there's mean threshold, looking for mean threshold below us. That's like to like array. Wait for it. Back to 1, 2. Where are we at here? We're at 16, 17, 18. This is the squabblers now. There's our 9, 10 turn. 11, 12. There's 14. 16, 17. Come on down. Just give me the mean threshold right here. Just give it a little kiss. That's all we want. There you go. So like to like arrays inside that range. See that? Ding, ding, ding. We ignore this overlapping stuff right now because that's all I've got inside that small little range. You even look for specific data points, and all it's doing is bouncing around between those two data points now. So I'm waiting for market structure shift, this tiny little market structure shift rules, which is waiting for a body to break down there and use this candle's mean threshold as support to go lower, or use this candle's high and use its mean threshold to continue working through the next no-go zone. It's quite that's reading, staying on the horse inside tight little ranges. You know, when you're calling those two levels and you see them get hit, that you're understanding what price is doing right now. And if you don't see that yet, don't sweat it. You'll get there. You'll get there. Just got an idea for Mark, so get my other. Of a good fountain pen. I do love a good fountain pen. Making some notes there, Mark, for our little chat. Imagine the chaos with 2,000 people. I don't know if there would be chaos. We've done really well to avoid trolls. We had a couple of trolls at the beginning, and I had Derek as my administrator. And if anybody else wants to be an administrator, by the way, let me know. I know, Derek, you're cutting down your amount of time you have in here. Unfortunately, we've been having some great people that come in and they see the value in this, and they don't get themselves too on a high horse. They just kind of roll with it, and they're not rude. So we haven't had to kick anybody out for over a year now. So, which is really good. I think it's been almost 2 years since we actually kicked somebody out. So we're getting people that are hopefully, obviously seeing the logic here. But if anybody's interested in being an administrator, you get a little blue badge like Derek's got there. You're basically just one of the deputies on the sidelines. If you see people trash talking people in the community, just get rid of them. If I don't see them, you can get rid of them. We don't want people in here that's not supporting each other here. So you see how that little new no-go zone? I just want to keep reiterating this. That's the new no-go zone, right? See how we traded through it, into it multiple times, and now we've taken out that low. That's the model 2. Now you're looking for model 3, a retest after taking this one. This becomes the new no-go zone. See that? That's a nice little model 2. Sorry, take a trade model 3. Vitaly's like, don't forget silver. See how we wanted that to keep going higher there, Vitaly? Right into the 50% of that wick. And now it's starting to move up a little higher. It's been really kind of a super chop though. What is it? What do we have there for that wick? We said right here. So it was down here. That's the 50% mark right there. Discount SIBI right here. Discount. Ran all the way up into premium. Came all the way back down into your discount box again. Ran through that premium level. Inside this range. 50%. You've already traded through this little swing point. Back into here. Ran higher. Did not. Yeah, we did. We closed above that there. Then traded below it. You're back inside this range. Trade above this. Now you've got a body above that high. You want to see that 50% of that wick, just like we saw on this hourly. You don't want to see. You want to see that right there. Stop right there and start going higher. Right there. If it starts to eat through here, then you're looking at 50% of the wick or 50% of this candle here. Oh, we got a body above here, so this becomes the new one. So right there, your line in the sand is pretty much that candle's open. You got to leave from here. That'd be a great place to leave. Institutional order flow entry drill for continuation on the upside. Stop losses right here, one tick below that low. There it is. See that? It's got to stay open. That's it. Institutional order flow entry drill. Get out of Dodge. Get out of Dodge right there. It's been a long time. Yeah, basically we're Darren's. Ooh, don't say that. Don't say ice. Man, that's no good. You're not an ice agent. Those guys are out of control down there. You're not my ice guys, man. You're just harbingers of happiness. You just want to make sure that you keep the flow of the community positive. Because you can see how people can get frustrated in here. If you don't understand the rules and you don't understand basic ICT concepts, you're going to get frustrated here. And I'm trying to show you the past. And if I'm going back in the past and I'm backtesting something, whatever I'm backtesting, it's not cherry picking. It's backtesting exactly what I'm trying to show you on the live feed. So what we look for in the backtest is exactly what we're looking for in the live feed. So it's not like I'm just trying to cherry pick any spot. I'm picking a range and I'm looking for the setup. I'll show you where the setup is and I'll explain the box-to-box setup, the internal range liquidity hunts, the take profit model 1, 2, 3, 4, 5, and 6, and 7. We have a 7 take profit models now. They're adaptable. I love it. How many are we going to end up with? What? I can see that being a whole chapter in a book series. See, there's our institutional order flow entry drill. As soon as it takes that high, you pay yourself right there and move your stop loss. Now, if that's your entry, you're just into profitability. So you don't want to see it come back down here. You want to see that get, so if your stop loss is one tick below that low, as soon as it breaks that high, move it right up against here because you don't want to see that get taken again. If it does come back down into here, again, you don't want to see, that's a graded response. That's a A-level entry, right near B level, I guess. That's 50% of that BISI. So you got to see it get out of here, Vitali. That's what I'm looking for. And I'm looking for senior carrot to be right here, up in here somewhere. That'll touch the carrot. Yeah, you have kept the group very pure for longer than I've ever seen anyone do it. It's tough, I tell you. It's easy to see people shift over. You can get some greedy people, and yet everybody in here has been so awesome. Every new person that comes in, they see the logic of it. And we've had people that have come into the community, and you've seen it too, Derek, where they've come in and they're keen to learn. Everybody's sharing. I love seeing, when you see 100,000 messages in your community, there's people talking, people are sharing, we're collaborating. I'll collaborate with anybody who's interested in doing some stuff. AI, bots, Doesn't matter. I'll collaborate with you. You take the credit. I don't care. As long as it benefits us all, then great. That's all that matters, man. We're all here to help each other out. We're on this big spinning rock through space, all of us. Nobody's any better or worse. We're all in the same spinning rock. If it gets blown up, we're all done. And we've got a limited time on this planet, so share it. Share it. Be kind to each other. It's just simple human kindness and dignity. That's all we need. Power tripping. This is just so ridiculous, some of the shit that's going on out there right now. Kindness. See how we changed it, changing direction on us? It's already traded through that level. You're on the wrong side of it. You're already through this level. You're already through the mean threshold. Through the mean threshold. You're on the wrong side of it. So wait. There's another example of rejection block. Pay yourself at rejection block. Comes back against you. You didn't want to see it take. You want to see it go higher. You didn't want to see it come back down there again. That's a good example of pay yourself at rejection blocks. A trading bar would be a great idea. Trade-offs and donate to charity. Oh. I've already got this little, when we were in the Masai Mara, there's a school there. We just did another big donation. Our group got together some money and we sent, my wife sent it off last, was it Tuesday, Monday? And sent it off, and they just received it there and they're so happy. For them, that's like 100,000 Kenyan dollars is huge for them. It's absolutely massive. So we saw the school and we just love the school. So helping them out, we went on a vacation. If you can do some good along the way, and we got 16 people, 17. My parents even got involved in this one. So they are so grateful. They're amazing people. They're so friendly, so loving, so kind, so down to earth. It's cool. It was cool. So anyway, that's where we're trying to make a difference. So if you guys are interested in getting in on that stuff, let me know. We can always include more people into the group. I didn't want to push that kind of stuff on people, but if you're happy to do so, we are happy to take donations and send them to those people. And every dollar that you have will be accounted for and sent there. So you only have to put your donations in, and I'll be more than happy to send those to the right people. And you get the credit, or you don't get the credit. You may be sitting in the sidelines saying, I don't care, here, just do something good with it. So we're kind of excited about that. And if I see, if they send us some videos of the stuff, because this specific school, I can't even pronounce the name, it's so long. They do dancing and stuff, and it's really cool. And they're part of their school has won all the way up to a national competition. I think they got second in the national competition. They are so good. And they did this dance for us when we were there. Wow. We were all in tears. We were like, you guys are amazing. It brought all of us to tears watching these kids dance their little hearts out with a Masai Mara dance. They're all the boys are in the back. They got this rhythm. Black people got so much cool rhythm, man. You see white guys do that, they'd be like, ooh, but the rhythm, oh, it was just beautiful. It's magical. Anyway, we got a new high here. We got a change in direction here. We've got a retest, and we got this breaker. We're eating through the breaker. So you want to see a market structure shift, because I got no, in this small range here, I've got no SIBI. So you're looking at the last midpoint. See how midpoint, mean threshold. If there's no SIBI here, you use the last candle. And I know Michael uses all three, but I'll use the last candle as the most sensitive out of all three of them, or four of them, or two of them, whatever. The last one's the most sensitive, and there's the mean threshold of it. Tap, get a response. You have a premium box here, and this last up close candle's mean threshold is sitting there, so it's inside of our BISI. So watt trade here. It's also inside an old breaker. So you see these overlaps. Now I'm looking to see if we get a reaction off of here and send this below here and targeting back down here again. Oh, you got little imbalances here too. And I think that'll be it for me because we're going into lunch hour and it's getting kind of choppy now. So unless you guys are just talking about stuff, I don't mind having a little chat. How do you think a trading bar would go? Monitors, coffee, tap. I love it. Wouldn't that be cool? A trading bar. Everybody gets together and you donate a portion of your winnings for the day. Wouldn't that be awesome? If people just go, it's kind of like how some people will tithe their earnings. If you just had everybody kind of goes to a bar and you say, here's your top list of all your top key things we want to donate to in this bar. Come in, we all get together on some trades, we put some trades on, and then you say, I'm going to tithe 10% of my trade for the day, put it in the bar, and then the bar manager sends the money off. We have another little spot down here. You click on the videos of what good you've done with your money, how it's helped the community out or helped out the organization. They want, you know, they want you to help them out. Then they send you videos about how the money's being used, and you all feel good about making some difference in the world. So you're out there working for you and you're out there working for other people. It's a great idea, Derek. I like it. I like it. What do you want to call it? What's the name of the bar, man? Come up with some names. The Bar of Hope, and make it look like a bar of soap. Cleaning up the world, man. And just have a soap bar. I can see it in my head right now. A bar of soap with hope on it. Cleaning up the world. The Bar of Hope. Play on words. Hope, soap. That's the first thing that popped into my head anyway. You have kept a very good trading, a good idea. Yep, you've kept a trading bar would be a great idea. Trade-offs, donate to charity. I find it easier to be kind to bees than I love the bees. The bees are a great idea. Maybe we'll start up a bee bar. There's a bee bar. We can call it a bee bar. And you can call it the bee's knees. That's the name of the bar, the bee's knees. Welcome to the bee's knees, people. Then what kind of music are you playing at the bee bar? Is it bebop music? I find that you should be kinder bees. Hans, thanks for today, Darren. To see you tomorrow. Already looking forward to tomorrow. You too, Hans. Thanks for tuning in, man. Appreciate your time. I really do. Thank you. What's my little algorithm telling me right now? It's saying stay the hell out of it right now, which is true. See how we're trading back through this level again now? All the way down to the mean threshold. Through this premium box. So if we close above this again, we're looking for this to go higher in silver. We're still looking for our upside objective up here. There you go. Closed above. Come back, give this a little tap, and send it higher. I think that's going to be it for me, you guys. Not a lot of, there's some good trades here this morning. A couple of silly clicks on the downside. I missed that little reversal one that we had right here. 27. Man, that would have been almost, that would have been under 200 and some odd handles just from there. And I not messed up the button. But anyway, you saw it. You saw it. You see how that premium level, if you're doing take profit model 5, you're still in it. You gave it all that room to grow, right? It squeezed you, and then it rolled over and went lower. Then we found support at the no-go zone. Boom. Breakthrough. No-go zone. Boom, 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 boom. No-go zone. Boom, boom. Boom. Look at that. Look at that. You pay yourself at the next rejection block. Old low. Done. You get to see my no-go zones. Just nailing it, right? You get to see them very clearly now, how they work, how they support price, and we're looking for that no-go zone is entry model 3 for a range extension. This is take profit model, or this is entry model 4 for range continuation right there. So model 3, range extension. Model 4, continuation. Wait for a break above market structure. There's the new bull trap. And then we have the go, no go zone, break above it. Then we start using the no go zones as the lines. You remember when Michael was calling this rock wall here, like a rock wall idea? I love that because out here in the mountains, it's a great idea. It kind of works well. So these are the holes in the mountains that you want to try and climb up. So you're using these go, no go zones as footholds. You're looking for holes in the walls like premium and discount boxes to get your foot on them, to get on top of the bull traps. Use the bull traps as another leverage spot to get on top of, to continue to march higher on the rock wall. Now you're starting to see the holes in the walls you can get your fingers into, right? As a metaphor. So you can see where you can put your piton in there, get some support, pull yourself up. You're going to free climb to your next level, and your fail safe is the piton. If it breaks through, that catches you and stops you from hitting the ground or your stop loss. It's an interesting little metaphor, but anyway, it works. Hopefully you guys got something out of that today, and I really appreciate your guys' time. Thumbs up. If you like what we're doing, hit the thumbs up, like, notify, tell your friends about it. Let's get this community built up. Let's help some other people out along the way here. And we never really advance in life until we help other people out along the way. Because being greedy is just a lonely road all by yourself with lots of money, and you're miserable. You're miserable. Let's help people out, man. Let's move this ball down the field, this human ball down the field. Help each other out. Anyway, thanks again for tuning in. I love you guys. As usual, I'm sending the love. Here comes the love. Oh, I'm sending the love to you guys. I hope you have a great day. I will see you all tomorrow. And thanks for tuning in. And thanks for popping in, Derek. Again, if there's anybody's interested in being a monitor, let me know, and I'll put you in. I'll just simply switch you over to a monitor. You get the blue status and the wrench. You get to be one of the wrenchmen. One of my wrenchmen. Not a henchman, but a wrenchman. You're welcome. Cool idea. I have observation hive on one of the walls. Thank you, Darren. Thanks for the stream. You're very welcome, Herbert. I hope you have to learn something today, Herbert. Sounds good. Great environment, creative concept. See you tomorrow, gang. See you, Derek. And if any fun this D, you're very, very welcome. Thanks for tuning in. See you, D. Hasta la vista, my friends. I'll see you on Telegram if I say anything cool and decent. What's our silver doing? Stand by. Ooh, not running any higher. Reverse. This is choppy, man. Be real careful here. See how it's run back through here? Looking at this mean threshold. If we lose this on the downside, you're coming back deeper into this, so we're not pushing any higher. Unfortunately, these hourly candles are just being tiny little. Look at this. Look at the chop going on in here. Yeah, no support there. See how that we just ran straight through it? That's where you get a lot of pain, because if your stop loss is sitting there, it ran straight through and took you out. And even one handle on this is thousands of dollars. If you're trading micros on that, you may have been a little more fortunate, but that's a full stop loss take right there. It didn't give you an opportunity to get out. Ran straight through your mean threshold. Looking for this and targeting down here now. I'd be looking for something like right there. Anyway, I'll see you guys tomorrow.